This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Markets don't seem to be worrying about coming bad news ahead of tomorrow's US March labour markets report. US initial jobless claims recorded a minor 2,000 rise last week from the week before, taking the total to 1.94 million. But that was a big 74,000 decrease as more benefits expired than new ones were added. A year ago, there was almost the same number of initial claims as last week. Updated American job cut data remains incredibly low, even if it is rising. US-based employers announced plans to cut 90,000 jobs in March, the most since January 2023, compared to 85,000 in February. Tomorrow we get the March non-farm payrolls data, and markets expect employer payroll jobs growth to rise 200,000. You'll recall they rose 275,000 in February. Meanwhile, US exports of both goods and services were 2.1% higher in February than in January. Imports were 2.2% higher on the same basis, so the overall trade balance grew fractionally in the month, although year-to-date the goods and services deficit decreased 2.8% and remains about 2.7% of US GDP. For comparison, New Zealand's current account deficit is 6.9% of GDP. Canada also reported trade data for February, but only for the goods trade, and their exports rose 5.8% to a new all-time high. Imports rose 4.6%, so their merchandise trade surplus rose to 1.4 billion Canadian dollars in February. And it is a public holiday in China, Ching Ming Festival, although Hong Kong financial markets will reopen today. Global container freight rates continued their retreat from late January peak. They are now down 28% since then, down 3% in the past week alone. But that still leaves them 65% higher than year-ago levels. The slowness of the recent easing points out that the twin problems in both the Panama Canal, drought, and the Suez Canal, security, are not going away. The decreases are because the global logistics system is adapting. Bulk cargo rates eased 7% last week and are in fact back to their long-run average levels. Steel and iron ore prices are back falling, both near their lowest in the past year, and probably an early signal that markets don't believe Chinese demand will recover anytime soon. And speaking of commodities, a new report says the world's population is shifting in a very significant way in an historical turning point. Also, it is not simply a matter of a static or declining world population. The nature of that population is also changing. It'll be much older. The report estimates there will be twice as many people over 80 as under 5. Nearly 900 million over 80s worldwide by 2100. A period of unprecedented demographic and economic adaptation awaits our grandchildren. There seems little doubt that small countries will have many more options than large ones, but the pressures from outside will be enormous. And speaking of natural stresses, keep an eye on Sydney weather this weekend. They seem to be facing a rather extreme meeting of two wild and wet weather fronts. The US Treasury 10-year yield is now at 4.35%, a little change from this time yesterday. And gold will start today softer by $5 at just on $2,288 an ounce. But in between, it hit a new all-time high of $2,305 an ounce. Oil prices have fallen $1 to just under $84.50 a barrel in the US, while the international Brent price is now just under $89 a barrel. And the Kiwi dollar starts today at just on 60.4 US cents, and a quarter cent firmer than this time yesterday. Against the Aussie, we're softer at 91.3 Australian cents, but against the euro, we're firmer at 55.6 euro cents. That all means our trade-weighted index starts today at just on 69.4 and up 20 basis points from this time yesterday. And the Bitcoin price starts today firmer at $68,048, up 2.7% from yesterday. Volatility of the past 24 hours has been moderate, though, at just on plus or minus 2.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.